topic today is how to buy the dip safely. A very relevant topic given the volatility in markets at the moment, and also given obviously markets have had a very good run since those COVID lows. So there have been many opportunities to do just that, to buy that dip. Having said that, let's focus on how you can use technical analysis to do that in a more safe fashion. Okay, so steps we're going to look out for before we hashtag BTFD. And of course, if you're not familiar with that hashtag, you can type that into Twitter and you'll get lots of interesting stuff. But it does stand for buy the dip. I'm sure you can figure out what the F stands for. Very popular hashtag at the moment, particularly in crypto, of course. Okay, so steps to getting this right. Number one, we're going to understand how we can make the trend work for us. Within that trend, we're going to look for candlestick signals, price action signals, and volume and volatility signals, and we'll go through each of these throughout the webinar. But it does start with trend, most important thing to get right. Yes, the goal is to buy after a dip, but the highest probability setups are going to come in a long-term uptrend. Okay, so the idea is that there's a long-term uptrend in place, and we're simply looking to buy pullbacks within that long-term uptrend. If you try to do the other thing, which is to buy stocks that are in well entrenched downtrends, thinking, well, you know, that's the low, no, that's the low, no, that's the low, often we find that it gets harder to pick the low. In fact, stocks that look cheap or look like they're dipping tend to dip further, end up looking a lot cheaper down the track. And I think this is really about the probability of your trading, and buying a short-term pullback within a long-term uptrend is the highest probability outcome, or giving you the highest probability of success. So if you get the probability part of it right, I believe then the profitability part of it will take care of itself. I think some investors kind of go about things the wrong way and maybe think that higher profits are going to come from buying stocks potentially that have fallen a long way. I don't agree with that. Let's kind of look at the corollary of that, which is on screen, which is a stock that actually has gone up a lot. And if you've been in one of my technical analysis webinars before, you might have seen this, but it's worth illustrating again. The question I generally put out to people is this stock cheap or expensive? And what is your normal, natural gut feeling about that? So don't tell me what you think. I want you to say your natural opinion based upon, years probably of watching stocks and looking at stocks, and you've seen stocks that do this. And is it a cheap or expensive stock? And I won't throw it out to the group today, but generally what I get is many people will say that stock looks expensive, and this is Tesla. It's May 2013, so you could imagine what's going to happen next. And see, I would have argued that stock is cheap, yet many people would argue that it was expensive. Of course, it was cheap. Turned out I was right. I was right this time, of course, because in all of my case studies, in my presentations, they tend to turn out in my favour. Doesn't mean it turns out in my favour in real life all the time, but I'm trying to illustrate a point here. And the point, just going back a slide, is that we have to understand what's happening in terms of demand and supply in this situation. So how do we get from, if we call this point A and we call this point B up here, how do you get from point A to point B? And we could argue, well, earnings were very good, or there was a lot of hype about the stock. Maybe it was on the Reddit forums, Wall Street Bets, who knows. I would argue that none of that really matters. All that matters is that we had a significant amount of demand compared to a very small amount of supply. And you need to ask yourself, why was there lots of demand? Well, because people's expectations of the future earnings of this stock were very high. Why was there very little supply? Well, exactly the same reason. People's expectations of the future earnings of this stock were very high. So lots of people wanted to buy it and very few people wanted to sell it. And that's the only way you can get from point A to point B. And if everybody wants to buy it because they're expecting great things in the future, and very few people want to sell it because they're expecting great things in the future, the question is, who are you to say whether it's expensive or not? I would argue that the market thinks it's very cheap, and therefore we should be trying to find ways to enter a trend like this. And that's the point. Doesn't mean we need to buy exactly at point B. Maybe it needs to pull back a little bit further. Maybe it needs to do a few things. For example, finding certain moving average setups that we're going to talk about in a second, finding the right candles, finding the right price action, finding the right volume and volatility patterns. We'll get into those. And yeah, as history says, that was a small pullback in what ended up being a great trend, and there were many other opportunities certainly within the trend. This is more recently, of course, and it's probably a little bit around here somewhere at the moment to buy. What we don't want to do is this and say, okay, well, this one looks cheap. It was at $28. It was looking fantastic, and now it must be very cheap because it's now below $20, and I'm going to buy here. And again, it's just about what the market is saying. Don't worry about what you think. Worry about what the market thinks. And what we can say with quite a lot of certainty, again, if this is point A and this is point B, the only way you can really get from point A to point B is if you've got a great deal of supply and very little demand. You've got to ask, well, why are all these people supplying? Well, it's because they believe that the future earnings of this company is, they're going to be significantly less than what they are today. And at the same time, very few investors are buying. Well, how do you know? Well, the price is going down. And the only thing you can conclude is that there are very few people buying. Well, why are very few people buying? Well, because they don't think it's cheap. They still think it's expensive. They still think it's going to go down further, and they want to get their money out, and so they can go buy something else. So the market thinks that this stock is expensive right here. And regardless of what you think, you might think it's cheap, but the market thinks it's expensive. And of course, as I said, all of my case studies work out really well, and that's where it was there. And actually did go up a little bit, to be fair, before falling further, and that's AGL Energy, which might be an interesting case study to look at today, because maybe that is one that we can buy the dip on. Maybe there are some of these signs that we like to look at. What are these signs? Okay, the first place I like to start to measure my trends is with the moving averages. And I use them for a few functions, but the main functions are, trend identification, and I do that over 2 time frames, so short term and long term. And then the other really important function is I use them for dynamic support and resistance. So once I can measure that long term uptrend, I can then use my moving averages to find points within that long term uptrend where the price might be pulling back and creating one of these buy the dip opportunities. But I think we also do need to understand the difference between buying the dip and a turnaround play or a trend change. I probably could have added trend change there because it's actually relevant in the example on the slide. So what we're saying here is, well, buy the dip is a short-term pullback within a long-term uptrend, okay, versus where the trend is potentially changing. Okay, we need to understand the difference between the two, and then somewhere down the track, where we need to understand, well, for that AGL example is, well, maybe there is an opportunity to buy the broader dip, the multi-year dip, but that's not really buying the dip because a dip is not going for multi-years. That's more of a turnaround play. There's a couple of concepts here. The first one, let's talk about this idea here of short-term pullback in a long-term uptrend versus trend change, and that's what we've actually got on screen. So this was a long-term trend. I can't remember what stock it is. In fact, I think it might be Bapcor, just off the top of my head, and we can check that out later. But you've got within this longer-term trend, this trend went for a long time, many tens of percent, if not hundreds of percent in the whole move. And we've got these sort of pullbacks here within the trend, but then we start to make significant reversals in price action. We go from certainly short-term moving averages supporting to short-term moving averages resisting, and we start to then break the long-term moving averages, and the long-term moving averages go from support over here, say, to resistance over here. So we need to understand the point where we go from, well, what's a dip, and then what is actually a trend change as well. Okay, and we'll work on some of these concepts as we go in. Okay, that's sort of bigger picture. Within the trend, we want to use some, I guess, more pinpoint observations, and candlesticks are my favorite place to start. And really, we are looking for these demand side patterns to tell us when it's time to buy, and then I'll talk about some supply side patterns to tell us when it's not yet time to buy. So the main two, and there's only two you really need to know in my opinion, are the long-bodied white candles, and that's long-bodied. This box part is what we call the body. It's the difference between the opening price and the closing price. And often outside the body, we will have things not drawn on screen, but I'm going to draw one now called a shadow. We will see it on the next slide, officially labeled, but that's the difference between the body and the shadow. But a Marubozu is a long-bodied white candle. It's called a Marubozu because it has a shaven head. That is, it does not have any shadows on it, and that's why it's called a Marubozu, because it's imagine, yeah, that's obviously the head is shaven, for example. No shadows equals total control. So if you think about what happened in this candle, we had obviously an open at whatever price it is, and that's not relevant, but it's more what happened after that, and how many sellers were there at the open. How far did it go down after the open? And the answer is, well, it didn't. So that tells you that down here we've got a huge amount of demand lying in the system. Why? Because whoever is down there thinks that this is a fantastic company. If you look at the power of those investors compared to those who are selling, well, the sellers have very little power at all. How do I know? Well, it didn't go down. How do I also know? Well, it went up a lot. So I can tell that there's very little supply in the market. So we've got all this demand, and if I could write it small enough, it would have to be even smaller than that. Supply is very, very small. Why don't people want to supply? Why are they hanging on? Because they think there's more in it yesterday. And here's the thing about a Marubozu candle. They tend to be long, which means that we've had a significant appreciation in price. And normally when prices go up a great deal, there's a bunch of people out there that want to sell. But I'd put to you that right at the close of the day, so here we go, 4 p.m. Sydney time, ding, 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 market's closing, very few people wanted to sell, even though the price went up a whole lot. Now, why don't they want to sell? Why did everybody want to buy? Because it's a fantastic stock, because its earnings prospects are wonderful. Who cares? It doesn't matter. The point is that demand overwhelms supply by a huge margin, and the probability, therefore, is that much of this demand is probably unrequited. It has not been met, and the next trading session, the probability is significantly increased. It will go up. Think about how you think about the markets. When you see those big white candles, those big up days, do you find yourself stimulated to buy into that stock, or do you find yourself looking at that going, oh, that's gone up too much, I can't buy now? If you're looking at a stock like this big white candle that's gone up a lot and saying I can't buy it, your thinking is at odds with the market because everybody else wants to buy it. So ask why aren't you thinking like the market? Price is likely to go high. It doesn't mean it's guaranteed to go higher the next day. That's not what technical analysis or good technical analysis is about. Good technical analysis is about the study of probability. It's more likely to go higher the next day. This is another one where we are more likely to go higher the next day, and this is about lower shadows, but it's still a demand side pattern. A little bit different from the other one, but again, lots of similarities in terms of how much demand there is and how little supply there is. In this case, we open here, but instead of not going down, instead of there just being this huge influx of demand from the open, actually there was lots of selling. And often we see these candles in the dips. And that's why this is a super important candle for today's conversation, because often it's part of a, say a short-term downtrend, maybe within a long-term uptrend, and somewhere around here is where our moving averages are kicking in. So we're starting to put some of the pieces of the puzzle together. Maybe, and I'll just go back one, that demand side candle, often we see them kicking off these lower shadow patterns. Okay, so often you get your Marubozu in here. Maybe I could have done the slides the other way around, doesn't matter. But often you get this up after the lower shadow pattern. Often called hammers on the charts, sometimes called pin bars, depending on your preference there. It doesn't really matter. It's a demand side candle. That's how I refer to them. Is it a supply side or demand side? I don't care what they're called. There's lots of fancy Japanese names. But on the open, yes, there was a huge amount of supply, no doubt. But we found a point where the demand came in, and the demand really came in. And this is how the market works. You've got lots of hot money swishing in, swishing out, getting stopped out of things, and then you've got the big money waiting to buy these things on pullbacks. Big money doesn't like to buy into the hype. They'd rather feed that hype with some supply, cause a reversal pattern, cause stop losses to go off from long traders, cause over leveraged traders to tip out, and then that supply they soak up at an appropriate level that they feel more comfortable with, that they're getting some value, and that's what this candle represents. Big buyers in the system coming back in to buy, and I know that because the price went from the low, which is all the way down here, all the way back up, in fact, to close over here on the highs. And were there any sellers at the end of this trading session? No, there weren't. Everybody's holding on now. We've gone from everybody getting out, or the weak hands getting out, to the strong hands getting in. This candle is totally representative of strong hands in the market. The Marubozu is often used as the confirmation tool of this this lower shadow pattern. So we've got some really good candlestick patterns there that we can use to help us buy the dip. And I'm only going to mention these now very briefly, that the psychology is reversed of everything I've said. So go back in the recording, listen to the psychology, and then just reverse that, right? But the reason why I'm showing you these next two today is because we don't want to buy when we see these. We're not going to BTFD, okay? Okay, so we're not going to BTFD if we're seeing one of these. Why? Because the demand has not come in yet. It's still all about supply. These are supply side candles, right? So give you an idea of what not to do. Similarly, if we've been coming down and maybe in the morning we get a rally, and this is why it actually allows me to make another really important point. Let's say we've been coming down, and yes, there is a long-term uptrend here. This is a long-term uptrend zone, and this is where we might be looking to target by the dip scenario. But we get a candle like this, and don't forget that if you're looking at the candle, say at 12 p.m. let's imagine this is not the close of trading, but let's say this is 12 p.m. Sydney time. You've come in, and let me tell you that the candle doesn't look like that. It actually looks like, in fact, why don't I do it here? This will be easier to do it on this side, so bear with me for 1 second. It's going to change. Okay, let's say we get in at 12 o'clock, and in fact, let me do one more thing. Let me see if I can do it. Hold on. It'll be worth it. Trust me. Yes, there we go. Good. Okay, so let's say we come in at 12 o'clock, and this is what we can see. So the market has been trending lower. It's doing everything we thought it would. There's been sort of black candles in the past, and we're heading in this short-term downtrend into our long-term uptrend zone. We get a candle like this. It's 12 p.m. and we go, wow, that's exactly what Carl told me to look out for, and I buy. Okay, in I go. There's that big white Marubozu, but that's 12 p.m. and then we come back at 4 p.m. okay, and we check the market, and guess what? It doesn't look like that anymore. It looks like, hold on, it looks like that. Because you've got to understand that Marubozu intraday, because the buying has taken the price up to here. That's where the high and the close is at that point in time. So at that point in time, the close would be up here. Okay, imagine that. Well, by the end of the trading session, that could be the close, because the supply came in from those highs, right, pushing the price down. And then what we're left with is a massive supply side candle, and not a buy the dip opportunity, but in fact the high probability that we're going to actually crash through that long-term uptrend zone, maybe in one of those trend change scenarios. So here's the other thing, apart from obviously looking out for the right candles and the right trends, you have to look at these candles after the market is closed. Because if you're looking at a live candle, you could be in that situation where you go, oh yes, this is the best buying opportunity, and then you end up in a complete opposite situation of what you wanted. So some really important points made there. Having a look at the price action, we're getting pretty close to the end, everyone, so don't panic. Not too many slides to go, because what I want to do is go to the case studies, the real life charts, and get you to throw some at me. We can look at some of the things that you're interested in at the moment. But points I want to make. Once we get into our long-term trend zone, for example, okay, so this is our long-term uptrend zone. We've talked about identifying, and we're starting to see our candles come in. Wonderful. Now going in here, no problems, okay, and it's going to depend on how aggressive you are. So let's say maybe you're a little bit more aggressive here. You might wait for a second test into that zone with, lo and behold, look at that candle there, that demand side candle. So second test. Maybe you're a bit more conservative, that's what you want. Maybe you're a bit more conservative than that, and you want to see these peaks and troughs rising, because that's telling us that our demand is building. Demand is building each time, because the prices aren't pulling back as far each time. And if prices aren't pulling back as far each time, we have to assume that either there's less supply or demand is in fact building. And maybe breaking through some key levels like this. So waiting for this idea of high peaks and high troughs to indicate building demand and diminishing supply. And we don't. Here's the other point: we don't always tune in at the exact point, at point 1 or point 2 or point 3. Sometimes we tune in here at at point 4, and then we're saying, well, understanding that previous peaks, which are historical points of supply, so POS stands for point of supply, tend to act as future points of demand. So maybe if we're sort of here, targeting an area or being attentive to an area here where we might be able to find a signal and buy again. Okay, so just illustrating, you don't have to be aggressive. You can use it in a more conservative approach, or if you've missed what clearly was a buy the dip scenario, maybe you can use some of these concepts here to get you in. What we don't want to do is get in here because what we're not seeing building demand now, we're seeing building supply. Okay, so this is again this idea of what not to do if you want to buy the dip. Okay, so building supply and diminishing demand with the lower peaks and lower troughs scenario. Okay, the final piece of the puzzle, and there's an asterisk here for very good reason, because you don't always see this, but I do want to make you aware of it, is that we're generally looking for elevated volume and volatility because they can signal significant tops or bottoms, significant blow-offs, where everyone who had to sell, if we're coming down, so if we've got this short-term downtrend into the long-term uptrend zone, everybody had to sell is sold, and you're going to get these big spikes in volume, but then what we want to see is a diminishment of volume after that, to say, yep, everybody who had to get out is out, and the demand was clearly here soaking it up, okay, and now we've run out of supply and the price is going back up, okay, and what's happening by the volume decreasing, why that's important. Okay, so resumption of the long-term uptrend on reduced volume and volatility. We've got this vacuum of supply now. So yes, the price is going back up. Okay, so we know demand is still very strong, but there is a lack of supply. Okay, don't forget that volume is buying and selling. For every buyer, there has to be a seller in that volume. So when volume is elevated, there's lots of sellers selling to lots of buyers. Okay, when volume is diminished and price is still going up, we've got lots of buyers, yes, because the price is going up, but they're having to pay higher and higher prices to attract enough supply out to get what they want, and that's why the volume is decreasing. There seems to be some construction noise going on, so if there is some noise coming through, apologies for that. Okay, putting it all together, looking for a confluence of factors, and this is the kind of the crux of it. The more factors we can put together, the more probability we have of success. Doesn't guarantee our success, it just increases our probability, and of course, as I said, if you get the probability part of it right, the profitability should in the long run take care of itself. We're looking for a short-term pullback within a long-term trend. We're looking for dynamic support coming in from our moving averages. So I drawed a lot of this sort of price action here, where we have our long-term uptrend zone. And if you don't know what that means, we're going to see one very soon. Demand-side candles appearing in that zone: white Maribozus or candles with lower shadows. High peaks and high troughs. Maybe you didn't get the exact point to get in, so we're looking for some confirmation that demand is in fact building through this phase. And recent volume volatility spikes, preferably they tend to signal blow-offs, and then you want to see the volume diminish as the price tends to go up after that. And the other thing, which I won't go into too much today, but it does give us a really sensible place to set our stop losses. So if we believe that all the demand came in here, and this is where the smart money is buying, if the price should move back below that zone, then something very horrible has happened. The smart money is no longer buying. I tell you what, the smart money is selling, and this is a good point to set our stop loss and just be out of the market anyway. Okay, but that's kind of not the crux of what we're doing today. This was how to buy the dip safely, not how to get out safely. So we'll maybe cover that in another session. Okay, so let's do some case studies. We'll go to the ASX Top 50 simply because I know many people will know them, and I know I'm going to get lots of examples in there. Let's work through some real life examples, or shout out a stock you're interested in that might be a candidate for BTFD. And if you've been in any of my webinars before, I can see a few people here now that have been in them. You know what to do. There's a question, a Q&A feature somewhere in your controls there on Zoom. Just type in a code that you're interested in, and we'll get to that as well. Okay, so literally I had no grand plans here. It was more about sort of just starting at the top and seeing what we can see and illustrating some of these concepts that we've talked about. We've probably got about 10 more minutes left just for your timing. Kevin's come in with MAQ. We'll get to that one next. But while this is on screen, let's have a look at it. So having a look at some obvious things straight away. So we talked about this idea of short-term moving averages and long-term moving averages, right? So this is our long-term uptrend zone. And if you don't know what moving averages they are, I'm going to tell you in a second. Long-term uptrend zone. And maybe we can make that a color that we can all see really well, which is there. And then we've got our short-term uptrend zone here. Okay, now for my short-term uptrend zone, I like to use my 21 and 34 EMAs, exponential moving averages. And look, I've got a little bit of coding going on that makes them into a ribbon and then turns them orange when they're going a bit flat and pink when they're going down. Okay, but they're just basic moving averages if you don't put the fancy stuff on. And then I've got my 140 and my 233 EMAs. You might say, Carl, why do you use those particular durations? And I just find that they work the best for me over many years of using them. And you might also have noted that they happen to be Fibonacci numbers as well. Maybe that's got something to do with it. But what we do see time and time again is the price moving into these dynamic support zones, and bouncing off them almost like clockwork until maybe we get some candles that indicate, well, things aren't as good as they could be. We get a bit of a consolidation through here. Maybe we even push through the bottom end of the zone until we get some candles that tell me that the trend is resuming. We get a little bit of pullback here to be fair. Resumption, it's ebb and flow sort of stuff, but we can use these areas as places to find those candles, to find that price action. So for example, to tell us when we are starting to see prices move back into higher peaks and higher troughs with the right candles in the right zone. Okay, volume and volatility, as I said, that don't happen all the time, and we're probably looking for buy the dip opportunity. So I would suggest that there's a big spike there and then volume started to come back down, so maybe this is looking good for a buy the dip opportunity. Unfortunately, it's probably one that hasn't worked out as well as we would like, but we can see higher peaks and higher troughs through here. We can see some wonderful demand side candles coming in all around in the correct zone, and as luck would have it, that one probably hasn't worked out as well as it could. Having said that, look, it did go up eventually, but maybe hasn't worked out as well as it could have. Okay, what's going on here? And it just happened to be the first one on the list, so we're not going to stay here for too long. But we do have some candles coming in now in the long-term uptrend zone, confirmed there twice, moving back into higher peaks and higher troughs. So that's encouraging, and therefore, this is potentially a candidate for buy the dip. I would suggest exercising some caution because we are seeing that the short-term moving averages have gone from offering support as they do on the way up to offering a bit of resistance on the way down. So in this case, we might be waiting for another nice demand candle, a Maribosu, for example, that takes us back above that zone, closes above that zone, and then we would feel more comfortable that this is more of a buy the dip scenario. Okay, so a real life case study. We've got some good signs in here, but we don't have the definitive answer necessarily to get in. But what you do have is a roadmap, a checklist, an idea of what to do, an idea of what you're waiting for. Half the fun of investing is having that, and I guess a great deal of the misery of investing is not knowing what to do. And I think at least now we've got a bit of an idea of what to do. And this one I think is less of a buy the dip, and it became less of a buy the dip once we cracked through this long-term uptrend zone. So you can see how we go. We went from higher peaks and high troughs to lower peaks and lower troughs. We went from quite a few white candles in the system to predominantly black candles in the system. Shadows pointing up, not shadows pointing down. Now the dividend is going to be, I think that might be the dividend there, so take that into account. But even if you add back the dividend, you push all of this price action higher by the dividend, we still eventually broke through the bottom of that long-term uptrend zone. So this is a great example again of this idea of this trend change, this long-term trend change. So less it's less buy the dip. So what I would suggest to you is that this is not a buy the dip candidate based upon based upon the candles we were seeing. So hopefully I'm just giving you the eyes now to say, okay, this is a candidate, this is not a candidate, and this was not a candidate for buy the dip. It's more like that ANZ scenario where it's potentially a trend change. It's not like that Amcor one. Okay, and then we failed through there. Now, okay, that's ancient history. What's happening now? Well, we are starting to see some signs that this is maybe a trend change the other way. And you know, high peaks and high troughs are coming back in. That's great to see. We're seeing more white candles in the system. That's great to see. We're seeing some relative strength. You know, down day on the market today, and BHP is still pushing higher. We're closing above some of these peaks here. The short-term uptrend zone is back. Fantastic short-term uptrend. You know, this is going to offer. Not sure what happened there. This is going to offer support going forward. Dynamic support. No longer offering us resistance, so we can expect some demand through here. I probably should have been more observant of some of these volume volatility setups. Sorry, I didn't pick out those before. You often do see it. This is probably more to do with the dividend than anything else, but you know, elevated there. Not the right candles to be considering buy the dip anyway. A little bit elevated here. Again, I'd suggest candles probably weren't spectacular. Not really seeing the volume volatility thing here. As I said, we don't see it all the time. Okay. Do we buy BHP today? Look, I think there's enough in it, certainly to take a position. If your view was to buy, I'm just using a round number here, $10,000 worth of BHP over the next, 3 months, you know, why not put a third of that into the market here based upon what we can see, and then you might be looking to put the next lot in when we see a candle that closes above that long-term downtrend zone. This is a long-term downtrend zone. This is resistance now. It hasn't been tested yet, but you know, they often do provide resistance, and maybe that's when you add the next thing, and then on the next pullback and go, you might be adding the final piece of your puzzle there. So you don't have to be all in and all out. It's about looking at the market, reading the market signals, and letting the market tell you, what you should do or what you should not do. Okay, we've got two more, and then we can do them quickly because they're pretty much the same stock, and then we'll finish for the day. The next one is Mineral Resources, not in the top 50, so we'll just head up here and look at those. And then look, it's more advanced than BHP's now. It's probably a good follow-up to our BHP example because it's actually closed above. You can see, what you can see is how these long-term trend zones often resist prices. Look at that. But if we are in this trend change scenario, so going back into that long-term uptrend, you will see these positive signs come in. So short-term uptrend is back in place. White candles coming in. Look at the predominance of white candles from this low. Look at the move back into higher peaks and higher troughs. And maybe we're going to get one of these volume signals here I've been waiting for. And you can start to see sort of that elevated volume around the lows. So around here, we've got this elevated volume, and then it starts to diminish. We're sort of running out of supply. And then actually the next volume spikes are coming on these up days where we're getting that big push, that supply removal actually pushing into the next phase. So we are turning the trend around. And then importantly, after that push, that initial push, the volume is dissipating, indicating that we have elevated demand. We know we have elevated demand. How do I know? Well, because price is heading up, but volume is heading down. So that's telling me that demand is hitting or coming up against fewer and fewer sellers. Well, why are fewer and fewer investors selling? Well, because they think this one's going back up again. So this is actually really neat case study of what to look at for not so much buy the dip of a short-term uptrend within a long-term uptrend, but looking for these signs of trend change. How do we buy these long-term downtrends that are turning back into long-term uptrends? So that's a neat case study. And then we'll finish off on FMGs. A bit of a theme here today. Look, I think that looks really good because it's actually doing some of those things that we were asking BHP to do. For example, closing above that long-term downtrend zone, which should be resistance, but it doesn't look like it's affording us a lot of resistance at the moment, and again on a pretty terrible day on the market. So doing all those things we talked about for white candles coming in, we're seeing sort of elevated volume around the lows, a bit of volume here on a push to get it going again, and then less volume as we move up again. So I like this one, and if you've been following me for any length of time, you know that I've been putting Fortescue out there for a while now as a potential turnaround play. finish off, of course, by saying that Thick Markets, we are definitely the good guys. If you're not already a client of ours, head over to the website, get an account open. You could be trading in just minutes, and you get to enjoy the ability to trade over 4,100 shares and ETFs, $8 flat rate trades with your own share sponsorship, 24/7 customer support, world-class trading app, and of course, my analysis and research. If you're watching on YouTube, don't forget to hit the subscribe button and the thumbs up. Let us know that you like what we're doing, so we'll keep doing it. Apart from that, it has been an absolute pleasure chatting with you today. Hopefully you learnt lots. I certainly enjoyed talking about charts. I always do, and I'll catch you again in a session in the near future.